The Baron of Deal-making, in grace, bestows knowledge upon thee. Esteemed and cherished, our bond begins, with trust and virtue. For this we agree, sincerely.
Let us compare real estate tenants to corporate bonds. In the beautiful world of investment real estate, you can do this without hurting anyone's feelings. You want AAA, corporate bonds as tenants. Let me explain, but first an introduction to the Baron of Deal-making.
Hearken, ye noble souls, to a noble sir, most grand, Sir Roderick, a baron in the land, with alchemy's touch, like Midas of old. He transmutes real estate deals into glittering gold.
In the beautiful world of real estate investing, there is what is called credit risk. It is the risk that your tenant will walk away in default. This is why you want the highest credit quality tenants that you can get. The good thing is that, unlike a bond, in real estate you can release the unit or the space of real estate if the tenant defaults, while the tenant may still owe the landlord. You also have rollover risk. This is the risk that your tenant may move out at expiration, and the terms may be less favorable. You can mitigate this risk by spreading out the lease maturities over time. You should not have all lease expirations in the same year, but spread out over 7, 10, 12 years. Your real estate portfolio should be diverse as well. In real estate investing, there are a plethora of risks, from interest rate volatility to the ebb and flow of market cycles that are more local than global, or even the mundane like tenants that could not qualify for a library card in your multi-unit complex. But the good news is that you can use this to your advantage if you work with those in the know like Rod, a licensed real estate broker, but really more of an investor like you that can co-invest with you as a principal to the transaction, and can bring in decades of combined experience and expertise of a trusted team, as well as access to hedge fund capital of up to $800 million, ready to be deployed, but subject to the sweetness of the deal. What is a sweet deal, you ask? Well, a sweet deal signifies an investment opportunity that stands out for its exceptional value or benefits. These deals are typically characterized by being able to be acquired below market value, offering high cash flow potential, located in areas with strong appreciation prospects, coming with favorable financing terms, presenting clear value-add opportunities through renovations or repurposing. Identifying and securing sweet deals requires in-depth local market knowledge, meticulous and almost institutional level of skill in conducting due diligence, and often an extensive Rolodex of trusted contacts built up over the years. You may have a sweet deal within your beloved network. Let us brew up a cup of coffee and have a sit down to discuss this sweet deal that you have. It might be your lucky day, but of course there are no promises. We say no, many, more times than we say yes. It is a selective process of filtering, but when we find something we like, we can move fast.
Real estate advisory provided by Commercial Real Estate Las Vegas B37884. The firm may act as a principal to the transaction as a co-investor, general partner, or a lesser role, with an equity stake or rather principal as defined by statute, pursuant to the disclosure requirements. Thank you. Contact us for more details.